Okay, we're going to talk about the 5 biggest mortgage mistakes and misconceptions. If you're enjoying this video, click below to subscribe to our channel and follow us on social media. Number 1, I don't want you to pull my credit because I don't want it to impact my credit. We hear this all the time, guys. This is not the case. You can absolutely have your credit pulled. This is the only way you can actually effectively use your credit, and this is a very important part of being pre-approved. If you have established credit, you are not going to see a drop in score. Typically, the only time that someone will damage their credit by having it pulled is when you have multiple people working on your application at the same time, such as multiple mortgage brokers, banks. That is when your credit will take a hit. If you're working with one specific group, you don't have anything to worry about. Number 2, when does my pre-approval expire? We hear this all the time. The banks put a lot of pressure on your pre-approval is going to run out in 90 days. You better go buy a home. This is not the case. A pre-approval is made of 2 things. Number 1, a rate hold, which is held for 120 days with most institutions, and B is your qualification. Now, assuming that interest rates and your situation has not changed, even if you don't buy a home for a year, you are technically going to qualify for the same amount of financing if everything is the same. It's a simple formula: income compared to liabilities, qualification, and stress test. Number 3, not understanding your mortgage product. We see this far too often. People are having conversations with us not understanding that they were on a fixed rate mortgage that could have dramatically high penalties. Everyone needs to educate themselves. You need to work with a good advisor that can take the time to explain these products so that you can make an educated decision. There is no mortgage broker or banker in this country that should be telling you what product to take. We should be advising, educating, and helping you make a confident decision. Variable and fixed are 2 dramatically different products, and they both have pros and cons. So just make sure that before you sign that document and you commit to that mortgage, you have a good understanding of every aspect of those products. Number 4 is down payment. Down payment can be an absolute nightmare when it comes to documentation, and it can make your life very frustrating when it comes time for your final approval. So our biggest tip is leave your money in 1 or 2 accounts. Don't touch it, don't transfer it. Leave it all, let it settle. That's going to make your life a lot easier when it comes to documentation. As an example, if someone has 5 or 6 different bank accounts with constant transfers throughout, we have to trace every single dollar and every single transfer back 90 days. So there's going to be a lot of documentation, there's going to be a lot of questions, and it will be a huge relief for you if you do not have to deal with that. And lastly, number 5, chasing rates. Rates are a very important part of this process, but you cannot chase an interest rate. It's very likely that you will end up with a poor product. There are multiple different products in our industry, and some of them will actually have a lower rate, but it's a very poor mortgage product with no portability, higher penalties, very, very restrictive. So you have to understand that rate is a major factor, but it's not the entire product, and you need to make sure that you're getting into a good product with a competitive interest rate. Don't chase rates. So those are the 5 biggest mortgage mistakes and misconceptions that we see.